I spoke exclusively earlier today with freshman Virginia Democratic Senator Mark Warner. A short while ago, he is a rising star in the Democratic Party. He is also very deeply involved in financial regulation and wants to terminate too big to fail. Take a listen to his interesting views. Let me ask you, as somebody myself has been a supporter of Senator Dodd's process to end too big to fail, let me go to Sheila Bair's criticism, which was echoed by Senator Richard Shelby. Ms. Bair was worried that the current bill allows for a, quote, backdoor bailout, meaning, I guess, that the FDIC and the Treasury can apply debt and loan guarantees, but not go into receivership or bankruptcy. Many people, including Mr. Shelby, are worried that that shows we're not ending too big to fail. Do you have a thought on that?
Absolutely, Larry. First of all, the Fed program, any lending they do has to be not specific to an individual entity. It only can be for solvent firms, not insolvent firms. The FDIC approach, if they want to come up with a loan program, they got to come back to Congress to get it approved. And frankly, what we've put in place are a whole lot of speed bumps for any of these, large firms in the first place. Higher capital requirements, liquidity requirements, making sure that they actually have to have a plan that gets blessed by the regulators that shows how they can unwind. So they're not only, some of these firms try to be too cute to fail by trying to make themselves so interconnected they can't fail. They've got to have a plan that actually gets blessed on the front end. And we've got, a strong preference for bankruptcy, the normal process. God forbid we get into resolution. The one thing we're going to guarantee is if you go into resolution, your firm's not coming out. You're going into receivership, not conservatorship, and any rational management team or any rational group of stockholders is not going to want to prefer resolution.
Well, that was sort of my impression.
Absolutely.
When I first read the Senator Dodd fact sheet and so forth. Will the language be tightened? In other words, when Sheila Bair made this criticism of the backdoor bailout, and again, Senator Shelby is concerned about that, Mr. Dodd issued a press release saying the language would be tightened to move it in the direction you just said, resolution or bankruptcy. Has that language been tightened?
Well, Larry, that's part of what we're going to go through, and I think there's no policy difference. We want to make sure the taxpayer is never on the hook again for bad decisions made by guys on Wall Street. And we want to put every barrier we can. Can you predict every eventuality? Absolutely not. But you can come up with the premise that says bankruptcy is the preferred route. Matter of fact, we've even put a judicial check in place so that if somebody in an administration in the future, ever wanted to prefer resolution, there's at least a judicial check there. If you end up going resolution, though, you're toast. Your shareholders are going to be wiped out. Your management's going to be wiped out. And we're going to make sure that if there's any exposure on the back end, that exposure is picked up by the industry, not by the taxpayer.
All right. Thank you for that. A couple others before I get to derivatives. I know you've been involved in that too. But there's another criticism that the Fed, in its emergency lending under so-called Rule 13.3 or whatever it's called, that the Fed can open the discount window, provide emergency funds, and that would bail out the banks, that would bail out a failed institution and prevent them from going into bankruptcy. Where do we stand on the Fed's emergency lending?
Well, 13.3, I think there could be some additional tightening. I think that's what we're looking at. But remember, the Fed can only lend to solvent firms. And there's going to be a much more transparent audit trail after the fact. The GAO can come in and look at this. So there's not going to be some of the kind of sleight of hand that may have taken place in the past. You're going to have to show that it was a solvent firm, and there's going to be that audit trail. And if there's ways to tighten up some additional on 13.3, we'll take a look at it.
All right. And the other issue that comes around, the $50 billion bank assessment. Now, some people are saying that's a slush fund to keep banks afloat and do whatever is going to be done with it. Other people say, or this is my thought, is that a sort of debtor-in-possession fund to provide a safety net for moving through bankruptcy?
Larry, you're dead on. It is exactly the frame we've been looking at. Debtor-in-possession financing to keep the lights on until the FDIC can make an assessment. The real money that will come about to help get through a resolution will be the ability for the FDIC FDIC to borrow against 90% of the unencumbered assets. But you don't need the government rushing and making some short-handed decisions because they've got a 24-hour window to close out. The $50 billion fund, funded by the financial institutions, not funded by the taxpayer, gives you a little bit of a operating capital cushion. But since this funding is going to go in as debtor in possession, top of the food chain, ahead of everybody else, clearly it'll be recouped, and it'll be recouped from industry. So the alternative of those who say, and we can maybe make this fund a little bit smaller if there's a business case to be made, but if you get rid of it entirely, what you end up with is either the government making a ill-informed decision in terms of how much money they can borrow against in terms of the unencumbered assets, or you've got potentially taxpayers involved in a short term funding this kind of operating capital shortfall.
Well, I always saw it as a debtor in possession. There's a lot of misunderstandings about this. I mean, you do have to keep them afloat even while they're in bankruptcy.
Absolutely. You've got to have that bridge financing. But remember, if you've got the process that's going to lead you towards receivership, that's going to put you out of business, and if you've then got the ability for the FDIC, if it's a large firm, by nature it will be, to borrow against the unencumbered assets of the overall holding company, that's where the real dough will come from. But you need to make sure you've got some short term. Could that number be different than 50? That's a legitimate conversation to have. But for somebody to say that this is some kind of a bailout slush fund really shows, I think, a lack of understanding of how these large firms would go through a resolution process.
All right, well, this is music to my ears because I've been supportive of this whole dog process.
I know you have. And I think folks are looking, too big to fail is where the hot button is. Consumer's kind of like the public option in healthcare. It's important, but really the core of this is making sure we end too big to fail, that we put the fear of God in Wall Street to make sure that they're not going to have the government bail them out. And I think if there's ways to improve it, we'll have at it. But I think we've taken a giant step forward.
I'm getting killed by my conservative friends and colleagues because I came out supporting this thing. So I'm very glad to hear your point of view. Let me ask you a couple of other short ones, sir.
Sure.
The consumer protection piece, stand alone, or will it be connected to the Fed or another banking regulator? I mean, my friend Elizabeth Warren, she's a great lady, but some people think she needs, some kind of adult supervision when we do this consumer protection business.
I think at the end of the day, the consumer protection area will be connected to some existing entity. At first I didn't think the Fed was the right place. The more I've thought about it, actually the Fed is probably as good a place as any. And I think from the consumer side, the fact that it will have independent funding, that it'll have an independent chair, that it'll have some rulemaking ability, you do want to make sure that you end up not giving contradictory advice, particularly the smaller banks where one day you've got a consumer regulator in, the next day you've got your prudential regulator in. You need to give unified, consistent advice, and I think pairing it with an already existing entity makes some sense.
And one last one on this subject. You've been very involved, I think, with Senator Judd Gregg and some others on what to do about these complex derivative securities. Can you give us a state of play on that?
Well, I think it's again one of the areas where there's really not a policy difference. I think most of us all agree for legitimate industrial end users, hedging is an appropriate tool to map out their business risk. You don't want an investment bank to come in and buy some, small little airline carrier and then be able to use that as a way to game the whole system. But driving that industrial use exemption in a way that's appropriate, you got to get into the weeds because the weeds are where billions of dollars are at. You also got to make sure, I think one of the areas where Senator Jack Reed has actually been, I think, done some great work is saying that for those markets where you've got enough standardized contracts, not only to look at a clearing function, but to try to push as many of those contracts as possible to an exchange so there's much greater transparency. But getting that industrial end user exemption written the right way is where the rubber hits the road. I don't think there's a policy difference, but there is some differences in the weeds.
All right, one last one. I can't resist a political question. I don't want to talk about the weeds of health care. Everybody's kind of fed up with that. We've already done that. But
Amen.
I want to ask you this politically. Look, you have always been a moderate. People regard you as a pro-business moderate.
Yep.
You yourself were in business before you came to politics. A tough article in the Wall Street Journal yesterday by my friend Dan Henniger said the following, that with the passage of Obamacare, the Democrats have now reverted back to the pre-Clinton They are the party of government, big government, and the Republicans who voted against it are the party of the private sector and free enterprise, and that the country is going to revolt and punish the Democrats come November. Your thought on this, Senator Warner?
Well, listen, I don't think that's the case. I think the health care reform, there's a lot of good in it. There's a lot of problems in it. What it will do is it will shock the system. And if the Democrats' predictions of what happens come out, great. If the Republican predictions come out, we're going to have to come back and fix it. Remember, where this debate was last fall when there was a question about a public option, there's no public option. Most of this is still going to be driven through the private health care system. What I want to try to work with, I've already started talking to my Republican colleagues, we got to hone in now, probably won't happen this year, but we got to hone in on cost containment. We need a lot more price transparency in healthcare. We need a lot more data mining. We need to really change the whole fee-for-service basis. Our whole financing around healthcare is broken, so that's what I want to roll up my sleeves and keep working on.
Do you think that the Medicare tax on investors, which is really controversial and unpopular on Wall Street, is that thing amendable down through the years? It doesn't kick in for 3 years.
Listen, I think that was a way to kind of get us across the finish line in a way that lowers the deficit. I do think there's more to be said around that issue in terms of when there's a look at capital gains. I think we frankly need a whole fresh look at our whole business tax structure in a way, and I've got some ideas on that I hope to be able to come back and talk to you about, Larry, to make ourselves more competitive against all the other OECD countries around the world. No. And that ought to be part of the mix.
All right, Senator Mark Warner, I know you've been throwing all-nighters all week. You're very kind to give us a Friday meeting. We appreciate it. I hope to revisit with you before too long.
You got it, Larry. Thanks, man.